Welcome to Crypto Alpha Edge, your daily dose of clarity in a market full of noise. Whether you're a pro trader, a data-driven investor, or just tracking the pulse of crypto, you've come to the right place. Every day we cut through the volatility to bring you the sharpest moves, freshest signals, and high-impact insights, all within the last 24 hours. Let's dive in. Market overview. The crypto market is experiencing a modest cooldown after its euphoric run in May. Total market capitalization has pulled back to around $3.24 trillion, a drop of nearly 2.6% in just 24 hours. This wasn't a full-blown correction, but rather a technical breather. Volume followed suit, sliding below 130 billion as traders adopted a wait-and-see approach amid growing macro uncertainty. Bitcoin's price action has become the focal point of institutional desks once again. After briefly reclaiming the 106,000 level, BTC is now hovering around $103,500. That's a 1.6% drop day over day. More notably, we're seeing repeated rejections below the 110K resistance band, a psychological barrier that's proving tough to crack. Technical analysts are now pointing to an ominous chart setup. The MACD is losing momentum, RSI has dipped under 52, and Bollinger Bands are beginning to tighten, all signaling reduced volatility and the possibility of a larger directional move. Could 93K be back on the radar? Possibly, but strong on-chain metrics, including holding wallet growth, remain a counterforce. Ethereum is facing short-term selling pressure, but retains structural bullishness. Currently trading near $2,490, ETH has slipped around 4% in the past 24 hours. Despite that drop, it's attracting fresh attention from analysts charting a cup and handle pattern against Bitcoin. Why is this significant? Historically, this formation has preceded breakout rallies, and projections now range between 30 and 55% upside. Combine that with the ETH BTC ratio stabilizing near support, and you have a setup that could lead the next altcoin cycle, if market conditions align. Whale movements. Meanwhile, whale activity is flashing caution. Over 2,000 Bitcoin moved onto major exchanges in the last 24 hours, a potential sign of profit-taking or preparation for short entries. One of the most notable liquidations involved well-known trader James Nguyen at James Nguyen Real, who reportedly lost over $17.7 million in just 12 hours. His positions, 520 Bitcoin and 982 million KPEP, were wiped as the market dropped below $104,000. His remaining exposure still includes 137.9 Bitcoin and 260 million KPEP, as shown on Hyperdash. Institutional wallets, it seems, are repositioning for volatility. Zooming out, the Fear and Greed Index has drifted closer to neutral, reflecting indecision. Investors are weighing inflation reports due next week, U.S. policy uncertainty, and the upcoming FOMC rate path. Bitcoin has historically traded with increased volatility leading into Fed decisions, and this cycle appears no different. From the Asia-Pacific session to European Open, flows remain light, a possible sign that global allocators are awaiting fresh catalysts. Until then, the market is likely to remain range-bound with pockets of isolated breakout plays. ETF and institutional flows. Institutional appetite appears to be cooling slightly after a surge of inflows earlier this month. BlackRock's iShares Bitcoin Trust recorded a flat day, while Grayscale saw minor outflows. Meanwhile, Canadian Purpose Bitcoin ETF registered its third straight day of redemptions, and flows into Ethereum futures ETFs remain weak as traders shift focus towards short-term volatility. Overall, institutional allocations remain elevated compared to early 2024, but momentum is pausing as macro uncertainty takes hold. To wrap up, the market is taking a breath. Bitcoin is probing resistance, Ethereum is flashing bullish divergence against BTC, and altcoins are recalibrating. This is not a time for panic, but for positioning. Smart capital is watching, not chasing. This was your daily insight from Crypto Alpha Edge. Stay sharp, stay rational, and we'll see you tomorrow.